Hello, everybody. It's Tortoise Investing. It is Monday. I hope everyone had a fantastic weekend. Today, we are going to start the week off with 5 dividend stocks you can buy and hold forever. Yins love these. I love making them. So, why not? Heck, I can do 2 of these a week because the markets are so changing up and down. And I could probably even do 10. Let me know what you think about that, what yins want to see. I want to make yins happy and grow this thing together. If you are new, join the 352 that have already done so and hit that subscribe button. Super free, super easy to do. Greatly appreciate it. And make sure to like and comment. Now, the 5 stocks from 5 different sectors, which is what I always try to do. I don't want to just throw 5 healthcare stock sections. I like to mix things up. You might see some repeats from time to time. It's because I still think they're on sale. So, we got Costco, Msci, United Health, Deere and Company, and Prolingus. I believe I said that correctly. So, if yins came for just that, thank yins for coming by. Appreciate it much. Now, let's go ahead and dive into the goodies, the numbers. So, Costco Wholesale Corporation, they've got a dividend yield of 0.82%, a payout ratio of 26.47%. And the thing that I love about this company is they have more cash than debt on hand, and that is beautiful. Their revenue is growing at an average rate of almost 12% a year for the last 5 years. Their EPS is growing at a rate of 16.6% over the last 5 years. Absolutely amazing. It is a great company. I love what they're doing. Their return on capital employed is slowly growing. Their dividend has been increasing at a rate of 12.23% over the last 5 years. So a great compounder in my eyes. This is just an old, reliable company. Free cash flow. Everything is just beautiful. Look at this. It's just brum, 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 brum. I don't know why I made car noises, but I did. But it is just, I love it. Costco is such a good company in my eyes. Next up, we got Msci coming in for dividend yield of 1.17% and a payout ratio of 45%, so nice and low still. They do have a little bit more debt on hand. They got $4.5 billion in debt. Their EBITDA is 1.33. The thing with this company, though, is their free cash flow is increasing at a rate of 15.98% year over year. Their free cash flow is growing quicker than their debt, so this one gets a small pass for my 3 times rule. We take a look at the revenue here. The revenue has been increasing at a rate of 12% over the last 5 years, and their EPS has been growing at a rate of 26.26% over the last 5 years. Amazing. This company is a growth monster. And the dividend is ridiculous. Over the last 5 years, 29.43%. What are you doing? You're doing something right to be able to keep that kind of consistency up. And they are doing share buybacks pretty aggressively, too. If you look here in 2020, they're at 84.5 million. 81.2 million. So they've bought over 3 million of their own shares back. I consider that pretty good. Return on capital employed is very reliably above 22%. Looks like it's even growing. So many things just ticking with this company that's just so strong. So strong. Next up, United Healthcare. In my eyes, probably the best healthcare stock out there. And with all of these guys, I'm trying to get things that are down from their highs. If you take a look here at Costco, at one rate, let's see here. Yeah, at one time Costco was a little over 600. It's now below 500. Msci here recently was in almost 570. It's now at 470. United Health, let's go ahead and show you in surprise for it real quick, was right at 550. It's now at 480. So I'm trying to get you deals. I'm trying to find you really good growing stocks that are down from their all-time highs. Just wanted to let you know that real quick. So dividend yield of United Healthcare, we got 1.38% payout ratio of 30.2%. Take a look at that revenue. The revenue's been growing right at 10% over the last 10 years. Their free cash flow has been growing at 15.12% over the last 5 years. That is lovely. You love to see just the free cash flow just go. I love companies that carry a lot of free cash flow and growing free cash flow. EPS has been growing at a rate of 14.53% over the last 5 years. They do have some debt at $54 billion, but their EBITDA is 29, right at $30 billion. So that's 3 times rule. I don't like companies that have 3 times debt compared to their EBITDA. Like I said, Msci does get a small pass on that one because it's growing its free cash flow quicker than its debt. Over the last 5 years, it's been growing its dividend by 17.08%. Another great compounders. All of these are great compounders in my eyes, guys. It's return on capital employed. I know you've heard me say this before. This thing hovers around 18% forever. They've been doing some share buybacks here and there. So yeah, very strong company in my eyes. Next up, one that I love, we got Deere. Deere and Company. At my new job, I drive a John Deere tractor. We got a dividend yield of 1.38%. Payout ratio, real nice low at 16.77%. So let's take a look at that revenue. Oh, take a look at the drop real quick. So again, I'm trying to find these things that are on sale. At one point, this is at 440. It's down to 356. So revenue over the last 5 years has been increasing at a rate of 12.55%. No, not their EBITDA. Their free cash flow, it is kind of all over the place, but it was going up, and they had this big drop. I will show you why that I am okay with this. EPS has been growing at a rate of 28.21% over the last 5 years. That is ridiculous. That is some ridiculous growth. They have $33 billion in debt. They have $12 billion in EBITDA. Covers 3.0 the 3 times ratio that I like. The dividend yield, dividend's been increased by a rate of 15.81% over the last 5 years. Again, this company in times of when things are bad, they don't mind to just pause and hit the brake on the rate hikes for a little bit. If you take a look back here, 2014 to 2017, they put a bit of a pause on it. Things were a little rough. In 2020, there was a small pause, but they have took off to the races here over the last little bit. A lot of things are ticking correctly for the company again. If you notice, during that time, it's kind of like a little swoosh here, kind of sideways, but it's growing. It's growing now. It's growing now. It's growing now. And their debt's not increasing by all that much. So lovely. The return on capital employed is going up. It's now around at 18%. So the reason the cash flow, in my eyes, the reason I think that this dropped is because they went from 314 million to 306 million. They bought 7 million of their shares back. That's gonna hit the free cash flow a bit there. But yeah, Deere and Company, I like it when it comes to industrials. Very good company in my eyes. And Prolongus, throwing in a REIT out there. Remember now, REITs are taxed differently than a qualified stock. They are taxed like normal income. So if we take a look over the last 5 years, Prolongus at one point was $173 about a year ago, and right now it is at $123. This is one of the storage unit. I don't think it's storage unit. I think it's warehouses, right? Yeah, warehouse companies. So the revenue has been increasing at a rate of 17.94% over the last 5 years. Free cash flow has been growing 21.22%. And we don't really pay too much attention to the EPS. And, of course, their debt's going to be going up. REITs usually carry quite a bit of debt. Over the last 5 years, that dividend's been growing by 12.63%. If you give me a second, I forgot to pull up the FFO, which is usually what you check when it comes to REITs. Wham bam. There we go. Prolingus beats Q1 FFO estimates. They came in at $1.22. The estimate was $1.21, and this comes to last year's $1.09. So, yeah, another company. It's just revenue's growing, free cash flow is growing, their FFO is growing. So many things is ticking in the right direction again. This is another really good REIT in my eyes. I like this a lot. I didn't just show Vici again, even though Vici's still on sale. Anyways, guys, that's everything that I have for you. Let me know if you want to see more top fives. I can like I said, I can pump out 2 of these a week. I can continue showing the EPS and the revenue growth in them. Let me know what you want. I want to make everyone happy. And yeah, until Wednesday, I hope everyone takes care. See you.